Welcome back to the Real Estate Standard Podcast, episode 24 for the week of June 15th, 2026. It's getting hot here in New York City. I'm Tim Kotzman. I'm here with Chris Drizga, Kenny Alves. Each episode, we endeavor to break down how serious operators, investors, and developers stay competitive and profitable in the 21st century through both the lens of Bitcoin and how it intersects with real estate. Today, we're going to go through some Westmain updates, and I'm going to throw it over to Kenny first for an update on Westmain storage stacking.
Thanks, Tim. As of today, June 15th, we hold 15.08 Bitcoin. So that's 1.5 billion Satoshis. So far in 2026, we've stacked most of that Bitcoin, 12.89 Bitcoin. And it's brought our Bitcoin yield to 589%. So what does that mean? That means that we've almost 6x'd our Bitcoin stack since January. Our Bitcoin per square foot is now at 21,724 sats per square foot. And we officially have achieved Bitcoin square foot parity. What does that mean? Well, if you take all the real estate, the commercial real estate in the United States, that's about 97 billion square feet of real estate. And if you divide it by all the Bitcoin that will ever be, 21 million, you would come out to 21,649 sats per square foot. So just by over 75 Satoshis, we have crossed the threshold where we're dually backed by Bitcoin for every square foot that we have. So that's pretty exciting. And then I'm going to show off our tax loss harvesting calculator that we've been working on, just monitoring the situation, as they say, looking at potentially harvesting a realized loss on our Bitcoin holdings. We've dollar cost average, and right now today in live real time, we're down 21%, which equates to a little over $250,000 loss. If we were to sell all 15 Bitcoin and buy it back, we could realize this loss. And we built a tool where we can kind of play around. Maybe we don't want to sell the entire stack because that might be considered, risky. So we might do something where we sell a portion of it, and we can play with those numbers here. We can see what would happen if we were to sell 11 Bitcoin at today's prices. We would realize 233,000. And we can also see what the net tax benefit is. So what does that mean? That means it's not dollar for dollar, right? When you realize a tax loss, you need to figure out what your tax rate is. So we have another input here where we can adjust this. Our tax rate is about 37 or 38%, depending on the year. And we can see what that net tax benefit would be. So on a $233,000 tax loss, it equates to $81,000 in value. So it's like a gift card to Uncle Sam's website, irs.gov, and you can use that credit there. You also get to include the fees. So there would be fees depending on what exchange you're using to buy and sell. So we put in an exchange fee here. We can play with that. Some exchanges might be a little bit more depending on where you sell. And that helps us look at all the costs. There still could be some spreads, right? We've been looking to kind of see how this would play out. And there might be a plus or minus, $200, $300 spread that you have to account for. And the cool thing is if we go into the manual mode here, and right now we have all these lots selected. So we can see that it's going to use the highest in, first out calculation. And October 7th, 2025, we bought Bitcoin at $121,000, $870 there. So we would be able to offset, we would be able to capture rather a $4,566 tax loss just on that single watt. And it's still short-term capital gains. It's 251 days old, and you can see how long in that last column there. We also have a cool way to turn it into a PDF. I might have to switch this screen so you can see this, or it's not going to let me show that. But we can do that later. But that's just good if we need to send this off to the accountant or the CPA just to clarify and double check things. You can just have a printout of what you're working on. But let me just increase this a little bit. We can deselect some of these things here. My screen is glitching out on me for a second. Let me refresh it. As I'm refreshing that, Chris, what do you think of this dashboard? And can you guys still hear me? Because it looks like I have a little bit of a lag.
Yeah, we got you just fine. I think it's a great addition to the dashboard. It just, again, shows another option you have at your disposal as the operator, and just being able to play around with some of these metrics and ultimate returns at the final numbers, I should say, not returns, in real time is helps you make decisions, informed decisions in real time, with a lot less friction. And in the game that we're playing here, time is money. So I think it's a great addition, and it'll be interesting to see. I think the market's giving us an interesting opportunity here, particularly the last week. I know we've shot up here a little bit the last day and a half or so as far as the spot price is concerned, but I still think that opportunity window here exists if we can kind of work our way through some of these questions and just calculate the numbers properly as far as the spread, the fees are concerned. I think there may be a viable or a good use case here as far as making one of these wash sale transactions, or these tax loss harvest transactions, excuse me.
Yeah, so I was playing around this weekend, just tweaking this a little bit and just running the numbers. And looking at it, I was thinking if we did something where we sold our highest cost basis from 80,000 and up, really, or even 82,000 from here, we could capture most of that loss, right? And the reason you wouldn't want to do it all is because you want to minimize exchange fees, you want to minimize any drag, and you could include, all of it, but then you're just going to have extra drag. There are costs. It's like going to be 1% round trip when you do the buy and sell, and then whatever spread on the exchange. There's maybe a better exchange to execute this on. Um, and that's something that we're learning. Hey, maybe there's a better exchange to do this. I think when we spoke offline, Chris, that you mentioned that you were aware there was a few service providers that have a tax loss harvesting solution built in. I was unaware of that, so I'm trying to MacGyver a solution, or just use the exchange that we've been using to execute. But it can be very nuanced, because you're looking at the Bitcoin, there's volatility. You obviously want to sell it closer to the bottom, right? So that you can capture the most loss. But you also need to be able to, you want to buy it back for less than you sold it, because you want to come out ahead in Satoshi terms if you could. But this is also, we're not traders here, right? Like the intent isn't to profit from this necessarily, like in the sense of in accretive Satoshi's perspective, Bitcoin's perspective. We're actually willing to pay, We're actually willing to maybe pay 10 million Satoshis to be able to harvest this loss because it's worth, 75, $80,000 to us in the future. So trying to, like, if you remove the Bitcoin from the situation, like forget that we're talking about Bitcoin, and somebody was like, hey, I got a gift card to the IRS for $100,000. How much would you be willing to pay for that gift card? And that's kind of the exercise that we got to think about here when we go to execute this tax loss. If we even do decide to do it, we may decide, hey, it's just not worth it. We're not projecting to have any capital gain taxes. But as a real estate company, it's actually more valuable to us like if you look at a pure Bitcoin treasury company. You think about all the optionalities that they have when it comes to capital raises and whatnot. When it comes to using a tax loss as a real estate operator, we have more optionality. If we sell a property in the future, we can use that. If we acquire a property, and then dispose of it in a few years later, we have a tool to offset that tax. If we want to do something with our digital credit, right? Say an opportunity comes along where we can put the $1 million that we've accumulated in digital credit as a down payment or a deposit. We would have a small capital gains, right? Because we've been lowering our cost basis as we collect those dividends, and we would have this gift card to basically write it off, and that can just make our operations better. So don't want to spend too much time talking about it, but it is important. It is a topic that has been pretty controversial since Strategy sold some of their Bitcoin a few weeks ago. And there is a clear distinction. A company that is putting Bitcoin on their balance sheet, first thing I would say is we're a real estate company first. We're saving in Bitcoin. We're adopting Bitcoin. We don't consider ourselves an internet company because we have a website. We're not a tech company because we have, a cell phone and a website and an email address. But those are the things that would have people would have considered you a tech company in the .com era. Oh, they're a tech company. They got a website. And so I think we want to think, as we operate this business, we operate from a real estate perspective, and we view that this potential tax loss harvest would benefit us in multiple ways.
Yeah, I agree with you, Kenny. I mean, I always joke that real estate investors are experts in not paying tax, right? I mean, that's that optimizing your tax situation as a real estate investor is paramount. But it's also the tax incentives that the asset class has had the last few decades is one of the reasons why it has grown to the size it has, because there are tremendous benefits to owning it. And for the folks that are critical of Bitcoin and say that it doesn't do anything, I mean, you're just flat out wrong, because we're using Bitcoin classified as property to our advantage in this scenario. I also think it's important to highlight here, if you want to scroll down just a touch, show the different lots, right? I mean, what Kenny's doing here, and what Westmain is doing, is they have been incredibly meticulous and organized about tracking their cost basis on all buys of Bitcoin. And this speaks to just the broader strategy, for anyone considering this strategy, is you don't just shoot from the hip and go buy Bitcoin with your free cash flow, right? You have to think it through. You have to be organized. You have to have systems and protocols and governance put into place to make sure that all the officers, all the stakeholders in the business, in the investment, have a clear understanding of what the game plan is, right? And what mechanisms are at your disposal at any given time. So Kenny's got a fancy dashboard here that we use, and it makes it really really easy to see all of this. But if you don't have this, whether it's kept in a spreadsheet or otherwise, you can get yourself into some hot water really really easily, especially if your CPA, for example, is not as deep into the weeds on all of this as we are, or as you may be. So again, just not necessarily a warning, just more advice, I suppose, is make sure you have very very clear, thorough, comprehensive strategies written down and outlined, for everybody to kind of point to.
Yeah, and that's actually really, I'm glad you said that because I could see a discrepancy. There's, these exchanges tried to calculate you know, the tax implications for you and tried to, give you the report so you can just kind of hand off to your tax guy and file, but they didn't take the exact lots that we would opt into. So, that can create a problem come tax
Yep.
time if you don't have your records in order and you don't, clarify which lots you're selling. And yeah, you just need to have this information or you're going to go through an audit, right? And nobody wants to go through an audit. So I think that's a good place to segue into our next topic, which is the title of today's episode, the digital credit wars.
Digital credit delirium. Over to you, Kenny.
Yeah, so I mean, it seems that the term Bitcoiner is kind of a blanket statement. I'm not a big fan of blanket statements because I think there are thousands of different types of Bitcoiners, but really there's been two big kind of camps, so to speak. One that is more of Bitcoin as a medium of exchange and self custody, ethos, and then there's this growing camp of Bitcoiners who are supporting the financial engineering, the layer twos on top, which are digital credit instruments like Stretch. And there seems to be, tension with is this digital credit good for the larger Bitcoin community, and who is this product targeted for? Um, and so, Chris, I'll let you kind of open it up from there, and then I got some stuff I want to get into.
Yeah, I mean, to say there's tension, I think, is an understatement. I mean, it's definitely become an incredibly polarizing topic. I was not around for the block size wars, but if there was any, if I had an idea of what it was like, to go through the block size debate, this is I think is about as close as you're going to get to that same experience. And one thing I've struggled with is I get both sides of the argument, so to speak, here. And I'm glad that we have opposing viewpoints and opposing opinions, and we're hashing this out in real time, in public. I think this goes to what we talked about last week, is that radical transparency is a feature, not a bug, essentially. And it's as challenging as it may be, I think it's ultimately a net positive for the space and what we're trying to do here. And it's a net positive that we're doing this in public. But the kind of the two factions you described, I mean, you have the OG fundamentalist Bitcoin maxis, right? That they have a lot of merits to their perspective, to their opinions, and their arguments. I can't disagree with a handful of them. On the other side of the coin, you have the Bitcoin capitalists, if you will, the Bitcoin financial engineers that are taking Bitcoin from its crib, so to speak, and bringing it into a much bigger playground so that the awareness, the adoption, and the maturation can continue to the next level. Um, and there's not going to be a perfect roadmap for that to happen, and I don't think you're going to make everybody. You're not going to please everybody in that process. The OG Bitcoin maxis, I get it. I mean, everything that we're seeing in this digital credit space, it runs counter to the original Bitcoin ethos and the cypherpunk cause. I get it. I mean, digital credit is essentially centralizing a bunch of Bitcoin, and it's not separating money from state. If that is why you got into Bitcoin in the first place, and those are your primary use cases and reasons for being involved, digital credit's not for you, right? Nor a treasury company. There's nothing wrong with that. But as you play this out and you get into, again, onboarding another, $100 trillion plus worth of capital, you're going to have these financial instruments. And it's not necessarily a good or a bad thing. You have to do your own research and assess the products for your own situation and understand what kind of risk you're taking on. But I think the bigger thing here is that digital credit has absolutely knocked it out of the park with product market fit, right? I mean, whether it's a real estate operation or an insurance company or a retiree. I mean, the use cases and the overall again product market fit is incredible. It's not how I personally would have wanted to onboard, the next 100 million people, but it looks like that's the direction we're going.
Yeah, there's so much to unpack. With the original ethos thing, I think all the people that understand Bitcoin, that are making these comments, because it's more of the long-term Bitcoiners that have been in the space for a decade plus that you see coming with criticism, and I love to see the criticism. Um, but those people also know that Bitcoin does not scale on chain to 1 billion plus users. Neither does Lightning Network. We know this. We know that there has to be layers built on top. Hal Finney and Satoshi knew this on the Bitcoin talk forums, talking about Bitcoin banks. And while Strategy and these publicly traded treasury companies are not banks, it's a stepping stone. It's the evolution to getting there. And they are issuing their own currency in a sense. They're selling their stock and they're using the proceeds to buy Bitcoin. So it's a stepping stone in a sense, like where if a bank was going to issue their own bank notes backed by Bitcoin, like Hal described, some could be leveraged where they only have 50% of the Bitcoin in the bank, and that's their stance, and they operate that in public, and people know, and that's the risk they're willing to take. There may be other banks that operate with a 10-to-1 backing, the opposite of the fractional reserve banking that's used today. So there could be a whole bunch of different banks with different thresholds, different criteria, and I think what we're witnessing now is the early products that are trying to be that in the legal frameworks that they have to work within. Right? There's a whole bunch of regulatory unclarity, and hence the name of the bill that's trying to get through. And these entrepreneurs, these businesses are trying to do the best with the rules and laws that are in place now today. And this is what a Bitcoin bank looks like under those rules and laws. That's my opinion. And so to say, oh, everyone should just be, buying pure Bitcoin and putting it into self-custody, I agree. Many people should do that, but we know that that's not an option for everyone. The other thing I want to kind of dive into next here, Chris, is the digital credit versus buy spot Bitcoin doesn't really get a fair apples to apples, or maybe I should say orange to oranges comparison. And, I see people doing the calculation. Well, if Bitcoin only does a 15 CAGR, you're better off. If Bitcoin appreciates at a 15% compound annual growth rate, that you're better off buying spot Bitcoin than buying digital credit. But that's not completely fair, because when you buy digital credit, you're actually peeling off close to 1%. If you're at 11.5%, you're getting close to 1% of your principal back tax deferred every month. So when you compare that to an unrealized Bitcoin gain, yeah, you may have had a higher gain in Bitcoin terms, but it's unrealized. And the minute you go to sell that, you have a taxable event. So now you have to apply a tax rate on top of it. So you have you have a higher hurdle rate. If you're going to peel off 1% of your Bitcoin every month, you better do it at the right time too. You don't want to do it on a day where it pulls back, and it creates like a whole, part-time job in a way to manage your Bitcoin, to have the same kind of comparison, right? Like, because in one hand, digital credit investors, they have cash flow, even though it's considered return of capital. I like to think of it as digital cash flow. And if you're going to try to make a comparison, well, you can get a better return in Bitcoin. Well, you got to do it with them peeling off the Bitcoin and selling a piece of the Bitcoin every month or every quarter or every year. You got to kind of factor that into the equation. Otherwise, it's not apples to apples.
Yeah, I like what you said there in the beginning. These companies, we're pioneering a completely new space in finance and economics. And along that path, it's going to be bumpy. There's going to be successes and there's going to be failures, right? I kind of attribute it to, if you ever were looking for a parallel or an understanding of what it was like when, electricity came on the scene, and how, people and the communities responded to that. Or how, the same thing with the steam engine, right? There were winners and losers on each side. There were arguments for and against it. Same thing with the internet. What we're doing here, I would expect to see the same thing, and only time will tell who the winners are and what the right approaches were. This is the financialization of Bitcoin, and I see the financialization of Bitcoin as being the stepping stone to hyper-bitcoinization, right? Because just like you said, a few minutes ago, Kenny, you're going to have different business models, whether it's a bank that's got a certain leverage ratio, or an insurance company that offers a certain type of product. The market is ultimately going to decide the winners and losers, right? And that's what we ultimately want, particularly because these companies are going to be run on a Bitcoin standard, more or less. So I think it's really hard to, criticize it now. I mean, we're in the first inning, like barely. I mean, we're not even out of the freaking warm up round, because we're barely a year in on these digital credit products. So I think there's a long road to go here. And, I think a lot of people overlook the fact that Strategy's already been through a bear market, right? I mean, this is their second go around. They wrote it all the way down from 69 to 16. And some of us have heard Saylor tell the story recently about, when we were in the depths of the last cycle. He had, I think, personally guaranteed some of Strategy's business or some of their holdings. Don't obviously quote me on that exact thing, but I remember hearing Saylor share that story. I don't think we are anywhere near that type of situation at this point in time. So, I think Strategy's a lot less risky than some of the trolls on Twitter would make it out to be, strictly because of that. And then you kind of go down, you start there and you go down the down the ladder, just bringing in some of the other components of the products. So that's my 2 cents on that.
Yeah, I think what you said about product market fit, I think that can't be ignored. There was over $10 billion of digital credit issued last year. And I think that there's demand for Bitcoin companies that want to be Bitcoin denominated, grow in a Bitcoin sense. I think there's demand for wanting to invest in companies that do that. There's a lot of people that just don't want to hold the Bitcoin for whatever reason, and you can't force them. It's like kind of like I have some friends that are like kind of like mechanics. They like to work on their cars. They have some old antique cars or whatever, and they like to get their hands dirty, go to the junkyard and find parts, and they do their own oil changes, right? And they always criticize me for taking my car to go get an oil change because I'm not a mechanic. And yeah, could I figure it out? Yeah, I could get under there and I can drain the oil and I could do that. But I have no desire or want to. I rather pay a professional to do it, right? Like I'm not a car guy. And for some reason there's Bitcoiners in the space that just can't get that through their head that there's people that don't want to be sovereign. Yeah, I know it's shocking because like we're all Bitcoiners and we're been shouting from the mountaintops like buy Bitcoin, use cold storage and stack sats, but just repeating that over and over isn't going to win the masses over. It's like that. What's the definition of insanity? Trying the same thing over and over again and expecting different results. That's what a lot of Bitcoiners have been doing for like this is my 11th year since I bought my first Bitcoin. And I've been hearing the same thing over and over. And it's like at some point you got to stop banging your head against the wall and just like realize that not everybody is going to take self custody. In fact, there's no possible way that can happen, right? Not everyone's going to run a node, and we just got to like come to terms with that as a community of Bitcoiners. What's the next best thing? Well, how about the knowledgeable Bitcoiners in the space do something where they create a business and add value and offer that company, make it investable to other people so that they can have Bitcoin exposure. I think that's kind of like a fair compromise. And what may be getting in the way is some of the loudest voices that are against the digital credit. They have businesses built around medium of exchange, right? And so they've spent a lot of their time and energy and money building tools to help people transact Bitcoin peer to peer. And that's awesome. We need more of that. And like, I use those types of services and products myself, but you can't force anything on anyone, right? If somebody doesn't want to do something, they're not going to do it. And I can't say that enough. Like, I feel like we shouldn't even have to have this conversation, but here we are.
Yeah.
And
I had to go through the same process, Kenny. Screaming it from the hilltops, trying to orange pill every single person and telling them showing them the right way to do it and self custody and store your seed phrase and et cetera, et cetera, et cetera. And you get to a point where you realize you can't do it all. And that's fine. I mean, I've made my decision and I run my life a certain way. To each their own. Let them do it. I mean, I think unfortunately, pain is the best motivator, and a lot of folks that took the easy way out or are opting to take the easy way out, not learning the basics or just buying paper Bitcoin, and it'll work for them in the short term. Great. If you're only interested in price exposure, then maybe that's the best bet for you. But I think there's going to come a point in time, if not multiple points in time, in the future where people are going to learn the hard way that they would have done a lot better off having cold storage Bitcoin. So, again, I hope that's, it doesn't hurt them too much, but it's going to, come full circle and people are going to learn the hard way. I always tell people when we're having this conversation, it's, about Bitcoin and Bitcoin adjacent products. I tell them start with spot Bitcoin, right? Whatever your personal goal is, get to that number of Bitcoin or Satoshis first, right? If your goal is to get to one whole Bitcoin, get there. Once you get there, then turn your attention to all the other exotic products. Don't start with MSTR, and be 90% common equity holder and 10% spot, right? I mean, that's what I think our industry, the digital credit space, I think we could have done, or we should be doing a little bit better job about educating the masses on that. Hey, there's inherent risk on these products that don't exist in the bearer instrument. That is something I wish we'd be a little bit more vocal about. And I think, to be fair, I think Saylor has done a good job of echoing that the last handful of months. He did a great job saying that at Strategy World back in February. And I think I've even heard some of the guys at Strive say that as well, either on the hurdle rate or on True North, probably both. So that's a really long-winded way of saying, everybody's got to make their own decisions and come to their own conclusions and assess the right risk profile for their situation and their goals. And there's nothing wrong with that.
Yeah, and I would even say it's not even that you have to like pick one or the other. And I totally concur with you about getting your Bitcoin first, right? Like set your Bitcoin goal, and like if you're sold on Bitcoin and you understand like the benefits of self custody, like secure that first. But like we're doing with Westmain Storage, there's two different use cases. For us, we use both. Bitcoin is a way to put your savings to work. The money that you have, saved, you can grow your savings. The digital credit is a tool to increase cash flow. I know it's return of capital. I'm going to probably keep referring to it as digital cash flow from now on, or something along those lines, digital rents. Digital rents can increase your after-tax cash flow by 20, 30%. Just like Bitcoin can increase your savings by 20, 30%. They're two separate things, right? Like you need cash flow. Why do you need cash flow? You need to live your life. You need to pay your bills, your expenses. And I know Bitcoiners that have been peeling off. They're like living on a Bitcoin standard, so to speak, right? Where they try to time the best they can. They may sell Bitcoin at the beginning of the year or the middle of the year, or they may do it monthly, but that is like rolling the dice, in my opinion, right? You never know when, like what you're going to get. And some people are okay with that. But if you're a business owner and you're like, you're not here for the, separate money and state, you're just like a business owner trying to make a good business decision. You're not going to be reckless and put all your money into Bitcoin and then like, just have your expenses double on months where you have a drawdown because you're living the Bitcoin standard. Like businesses will go out of business. So I just can't understand why it's like drawing so much controversy. Like, and the only thing I can think of is the people that are arguing against it may have a bias where they have a company that's made for medium of exchange and that they're, looking at this from a different angle. But, with all the other alternative coins out there and all the other arguments and debates to spark up, right? Like this is it just like it's insanity because anyone from the outside looking in, anyone that's has no idea about Bitcoin and digital credit, they see two Bitcoiners arguing with themselves, and from that perspective, they just see two idiots arguing with themselves. They got the credit digital credit investor and the hardcore Bitcoin anarchists arguing with each other, and they're both idiots, and we lose. So it's like, I think what's happening now in the space is great, because it seems like the guys that are running strategy and Strive, they've been on social media, reaching out and trying to help educate, and doing it in a nice way. They've been getting hammered with kind of slanderish terms here, and like they've kept their head up, and they've been doing it in a proper, elegant way. And it's good to see them take the high road, and to have this public debate, which is pretty fascinating.
Yeah, I like I said at the top of the hour here, I think the debate, the argument, the difference of opinions in public is incredibly positive and incredibly healthy. I think we've gotten too far away from that in really all aspects of discourse in our society. It's like when we were kids, they always told us the three things you don't ever talk about is religion. What is it? Religion, politics, and I forget what the third one was. Sex. Well, fast forward 30 years later, I mean, look at the shitstorm we've created across all three of those verticals just because people haven't, talked about it at the dinner table. It's ridiculous. So it's good that we're, it may not seem that way today, but it's a good, healthy process that we're going through. Even for the outsiders looking in that think both parties are, idiots. I get that. You're probably not wrong there. It's not a good look, but at the end of the day, I think it's ultimately, good, healthy, a net positive. And like I said, I think everybody needs to make their own decisions. But I think what we're doing here with the digital credit and Bitcoin is we're applying it to a business, right? Whether it's real estate or you're, running your local small business, you're using the business, or in our case, you're using the real estate as the underlying foundation, the cash generator to be able to accumulate Bitcoin, to be able to accumulate digital credit, to optimize around your venture, whatever that may be. The fact of the matter is, no matter what business you're in, you're getting crushed by expenses, right? The competition is more fierce than it's ever been. Expenses are, one-shotting you in the knee every chance they get. And folks are desperate. So to be able to use Bitcoin and Bitcoin adjacent products to optimize their lives, to optimize their business, I think it's ultimately a good thing. And I think that kind of that coincides nicely with the kind of the three tranche treasury framework that we talk about on this show, right? It's you have US dollars in a checking account for months 1 through 3, right? And then have, months 4 through 12 as digital credit, right? Make your interim reserves work harder until you need them, and then have your longer term reserves in cold storage Bitcoin, right? That way, particularly on the digital credit piece, that way, if you find yourself in a scenario like we've had the last 10 days, for 2 weeks, whatever it's been, where Stretch loses par and it's down 8-9%, like you have 90 days to let Saylor and the executive team, ratchet that thing back up to $100, right? You're not trying to pay tomorrow's bill with that, and you're like, oh shoot, it just lost 10% in value, right? So having a very thoughtful approach and framework to how you're managing your cash, your capital, is what we're talking about here, right? If you're really that weary on digital credit and you think it's digital alchemy, fine. Maybe your digital credit reserve is months 6 through 12. Right? I mean, give them a longer runway to get it back up to where it's supposed to be trading. But yeah, anyway, sorry, I'm on my soapbox now, but that's just kind of how I was, thinking through some of those things.
Yeah, I even like to look at digital credit as even longer term. Like I know we talk about using it in the near term for, expenses that may be 6, 12 months away. But even like, I mean, the goal for us at Westmain Self Storage is not to have to touch it unless there's a good reason to. Unless
Yeah.
we're like something, we have some financial hardship where, tenants moved out for some reason, or maybe there's an opportunity that presents itself. There's we can acquire a nearby storage facility. Maybe we liquidate that, use that as the down payment, or um, part of the funds to acquire the facility. So,
In that
I mean,
scenario too, Kenny, I mean, you mentioned we talk routinely about drag, right, and friction, right? The time that it takes to do any kind of real estate deal or business deal. The scenario you just laid out, right? You can liquidate your digital credit in a moment's notice and use that as negotiation leverage in a deal, right? In my world as a broker, one of the biggest things we're always hammering with clients and colleagues is the biggest thing in a deal is certainty of close. Certainty of close is paramount above pretty much anything else, right? 9 times out of 10. What does that mean? That means that in a real estate deal, some people will often take a lower price in exchange for a shorter timeline, right? Because that certainty of close, that peace of mind, is more valuable than an extra 2, 3, 5% on the deal. Again, not for everybody. Situations are always different, but the certainty of close is constantly a major decision point and talking point in a real estate deal.
yeah, and I know we've talked about this too, but part of our mid long term goal is once we have the balance sheet where we have enough Bitcoin and digital credit, if we're going out to the market and we're looking to acquire a property, to your point, we can waive the finance contingency, right? And you're much more likely to close without the number one reason a deal gets held up is because the bank pulls out and says, "You know what? Not going to lend on this thing." For whatever reason. Maybe the appraisal comes in undervalue, maybe the environmental has an issue. But once the bank, if you're relying on a bank and you got a letter from the bank, and that's what you're using to show the seller that you can close, they're going to look at you like, you know, I don't know about this guy. And then they're going to look at the guy that came in a little lower, but there's no finance contingency, right? To your point, they're going to, hey, this guy's going to close in 30 days. He's got the cash
That offers
sitting.
moving to the top of the stack.
So when you think about like, when you think of it from that sense, you become the best client for the brokers, right? That are going to represent you. Like if you're going out to buy a property, they're going to champion you all the way. Hey, this is the best buyer. They got no financial hardships. They actually have the cash sitting there waiting to go in
Yep.
Bitcoin digital credit. And so, yeah, I think that's going to factor in to just how we operate in the future. But that's more midterm, long term for us, but something we're excited to, put to work in the future.
Let's end this talking point or this talk track on some a positive note that I think the both cohorts, the digital credit folks and the Bitcoin maxis, can all get on board with. And I think, and that is watching digital credit completely destroy DeFi and broader crypto. I mean, and maybe it's just my X timeline, but watching and seeing some of the things occur the last handful of months in the DeFi space, quote unquote, whatever that means, and see a lot of these people and projects migrate over to Bitcoin digital credit is I mean, if that's not ironic, I don't know what is. But do you have any thoughts on that, Kenny? I don't personally spend any time in crypto or DeFi, anything like that, but it's to see the risk-free rate for Bitcoin, get made here in real time and essentially force the hand of the DeFi space is incredibly interesting.
Yeah, I've been seeing it on the timeline as well. Saylor caught some flack because, he retweeted or boosted a note from one of these DeFi protocols, I think it was, and um, he said it was a notification, not an endorsement. Um, so there was I did catch all that, and like my thoughts on it are, we've seen several kind of alternative currencies try to like latch on to Bitcoin. I don't want to even say their names because I just don't want to draw any attention to them. But I think you're going to see capitulation in the sense where they're going to build Bitcoin into all their products. And I think that's what he means by Bitcoin is one. When he says Bitcoin is one, it means that all the alternative currencies, they're not competing for the monetary network anymore. They're competing for a layer above it, for a smart contract, whatever you want to call it. And they're all going to package Bitcoin or digital credit inside. If it's a yield coin, or if it's going to have any yield bearing instrument or component to it, it's going to come from Bitcoin, and it's going to come from digital credit. And there's going to be no competition in a monetary chain, right? Like
At the base layer.
Yeah, the competition has now shifted to the smart contracts, right? And it's been that way for years now, but it's just even more apparent. And when you see these DeFi companies embrace what strategy is built, they are basically tapping out. They are tapping out and saying, okay, we don't want to be the money anymore. We're happy that Bitcoin is the money. We're happy that strategy has created digital credit for the yield. We're going to plug the yield, and we're going to plug Bitcoin into our product, and it's a wrap. We won, and we should be happy about that, and we shouldn't worry about I kind of like think about, and I'm not the first person to say this, like I think about how we cheer on Bitcoin like it's like a sport or a team or something, right? Like if it's going to be money, everyone's going to use it, whether you like the people or not, whether they're criminals or they're like good Samaritans or they're heroes, whatever they are, like it's for everybody, right? And
Yep.
to try to dictate what somebody's going to do with the money, and I fell victim to this too. I didn't really like the ordinals and the inscriptions and all that type of stuff, right? And you saw people going crazy. They're going to fork the chain to get rid of it. And I don't like that stuff either. But I'm not going to like fall into the mind virus of like, we need to um like die on this hill right here, right? Like let's just like let everybody use it how they want. It's permissionless technology. I don't need Sailor or Strategy's permission to add Bitcoin to the balance sheet. I don't need anyone's permission to add digital credit to the balance sheet. Well, you need the bank's permission, right? But like when it comes to Bitcoin and digital credit, like let people build, like let them do whatever they want. It's their time, it's their energy. If it's going to be short if they're building like their castle on sand, so to speak, right? Like it's going to crumble on its own. You don't need to go and like devote your time and energy and be negative about it, because if it's not going to work, it's not going to work. And just like ignore it. It's just going to go to zero on its own. Don't give it any time or attention. And so I know we're kind of rambling here, but I thought it was an important topic to discuss today, Chris.
Yeah, I agree. I mean, if we're pushing this and trying to pioneer this in real estate. I think it's important for us to comment on it, to have opinions, and discuss this in the open like we are everything else. So I agree with you. The last thing I will say too, and I wrote it down here on just some of my chicken scratch notes for today, was I know it's not passed yet, the Clarity Act, that is, but I've been trying to follow it as best I can. It feels like it's been a lot of fits and starts, all of that, but the last thing I heard on the Clarity Act as far as Bitcoin was concerned, there's not a lot of Bitcoin related things in the Clarity Act, so it's not really a bill for Bitcoin. I think it's symbolic for Bitcoin at best. But my understanding was that there was some horse trading in the 11th hour behind the scenes with developer protections, and the developer protections were ultimately traded for a few basis points worth of yield on stable coins and potentially digital credit as well. Don't quote me on that exactly, but you can look it up for yourself. But I think the entire industry, whether you're an OG Bitcoiner or a digital credit guy, wherever you sit, I think we all have a responsibility and an obligation to be incredibly vocal about developer protections and to make that really a red line in the sand, because it doesn't matter if you got treasury companies and digital credit, self-custody, all of this is for none if we don't protect the guys building the base layer. And making sure that those guys can ideate and innovate and build without having, in the back of their head that they may find themselves in a courtroom or God forbid a concrete cell, should be the top priority for all of us. And we should not have another samurai situation. So we all need to get off our asses and be a lot more vocal about that one, no matter where you are in the industry, because it affects all of us. Me, you, Tim, Westmain, treasury companies, Bitcoin native companies, all of it. So that, if there's anything, do you take away from today's episode is, that's the call to action, is to be, more vocal on developer protections and reach out to your various representatives to make sure that they are aware how incredibly important that deal point is when they're doing their negotiations.
Well said.
Yes, well said, Chris. Well, thanks everyone for listening and watching to today's episode 24, Digital Credit Delirium and Building on Bitcoin. Thought you guys did a great job with that. If this conversation was useful, please share it with someone, a partner, a client, somebody making decisions in the marketplace. New episodes of the Real Estate Standard drop weekly. Until next time, stay disciplined, stack sats, think long term. This is the Real Estate Standard. If you enjoyed today's conversation and you own commercial real estate, we'd encourage you to think about how these broader shifts might impact your own property over the next decade. Many owners are starting to reconsider how they structure their balance sheets, manage capital, and position their assets for the future. If you'd like to explore how some of these ideas might apply to your own situation, you're welcome to reach out. We work with property owners and investors to think through strategy, structure, and long-term positioning in a rapidly changing market. You can find our contact information in the show notes. And as always, thanks for listening.